Hey, welcome everybody again. Another live stream, True Scalping. Live stream with the Mohawk Forex team, based here in London and coming to you live, London. And yeah, today is all about the building permits and housing starts news. That's in about 10 minutes, a little pre-market news that might give us a little boost either way on the US-30. Be here. About 8 minutes to go, 9 minutes to go on these this high impact news events, so we'll see what happens with that. That's pretty much it today. Then we've got the NY Open coming up an hour later, and then for those of you who are in the VIP group, we're trading the crude oil EIA live 3:30 as well. Good, we took a win on the API last night, which was really good. Nice 100 points at the moment, so all going really well with the news. So we'll definitely trade that one. But first up is this the building permits news, obviously better than expected. Could push the US-30 in the opposite direction and vice versa. We look for reverse on events. But let's see what happens. As well is pretty much looking the same 30 here on our Axe trading system, marked out where the new event's coming. We're looking to get bullish again. Pattern, a little nice bear signal, bull signal. These were winners, look really nice. And now we'll get back these losses. Earlier we've got our breakout zones approaching. As always, go to www.mohawkforex.com for information on how to join our group and our Discord channel, where I do all the setups and chat and mentorship, and where you get access to this Axe trading system that's made for us. So you can only get it if you're a member. Had a good start this morning already. Again, we traded DAX, and there were all a few trades in and up. Took about four losses today and one break even, but we've done about 30 trades already. And we're 10% already on the account, so good. Yeah, the Euro Open and London were where it was at today. Nice smooth moves, and now we're into the 30s. What happened? And NAS both bouncing off heavy support. Save would bounce. NAS and exactly the same, pulled 2-3 points. We'll just see what happens if stochastic stays green and RSI goes upwards. Take buys up to our breakout zone. But if you start to see some retailers do it and points, vice versa, stochastic goes red and dips down into a zone. Very difficult thing to do, to raise prices without trying to press on other levers that you have in place. Level. There's a nice W as well. You can see we kind of flex costs where they can. Crazy M here. Look. Anchor.
Who's the next Target? Who's the next Walmart?
W.
I mean, you're going
about 5 minutes away. Keep an eye. Yeah.
You're also going
to as well.
Hear from some of the e-commerce names, and I think across all of them, you will start to see
if they should actually print the new as well.
A little better insulated, only because they do have pent-up
export
demand.
would be really have
celebrations being just a big part of where consumers are spending.
Thank you. Go there of Bloomberg Intelligence. That headline from Target. Let's go over that. They offered markdowns as demand for big and bulky goods actually fell. Tom, that's not a headline you would have found in many places last year.
Yeah, I really don't know what that means. I guess that means bicycles and that. But, John, it also could be the 9-inch Marina Long Valley swim trunks.
Red stochastic.
I mean, it could be a number of different things. What's big and bulky? I mean, John, we're talking original statements here.
We'll see what the news does. 2 minutes to go.
I think more broadly, it's original.
We're in IC markets, of course. We're trading 1/500 leverage, and starting today.
But they also had to confront a boom in demand.
Started with about $7,000 accounts.
For certain retailers,
already 10%.
They cannot find the right balance.
Right.
The right amount of inventories, the right amount
with these last few trades, we'll finish our trading
is moving so quickly. We had a demand shock, a really positive demand shock at the start of last year. And now this year we're facing headwinds and ultimately could be facing the opposite.
We always say unprecedented.
Countdown.
Unseen before. And really that is really what this all highlights, because we saw a period where everybody was stuck in their homes and buying as much stuff as they could. And now people are moving to experiences, right? I mean, we take a look at airline costs, how much the prices are going up there. How much are big and bulky goods, basic staples in homes that people already have in mass and frankly don't need more of? I mean, how much is this an issue of people just saying, you know what, we don't have to pay that higher price right now. We could take a plane to, somewhere else. And honestly, this to me, how do you gauge that out? How do you experience this shifting market with some sort of accuracy?
You can't be right all the time on the south side on Wall Street, but wow, Mike Wilson and Morgan Stanley, Tom, what a year he's having calling this market and the dynamics, the issues that ultimately would push it to go lower.
It's the underlying themes of Mr. Wilson's work, and when you're right, but it's the why you're right. And what they've really gotten right,
3 minutes to go.
pandemic change, the big
And we're right again. Nice. Doesn't matter to me whether we get a push up to form the Centris W or we'll go down. We'll trade it either way. Like I say, traditionally, good news means a reversal on US-30 before it goes the way of the news, and vice versa. And if you're trading gold, if you want to trade gold, then usually gold goes the way of the news. Not always, and obviously we wait for confirmation. Fantastic. RSI. Give us that. Nice little move now. Look nice. Oh, you could have been on your 30, but it's too close to this news, so you want to wait in. 2 minutes to go. We'll just screen here.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor, y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día.
Ready for the countdown. Good luck, everybody. Make sure you're logged in. US-30 is pushing up nicely, look.
Incluso mejor que las zonas verdes.
Again, don't be tempted to jump in, not when there's a major economic news flying, and we're up against this resistance anyway, so just on wait.
De zonas verdes como tienen planteados el plan director urbanístico.
People make the mistake, they'll see a move like this before a news event, jump in and then get burned. It could go the way. Big 50-50 gamble though, we're not about be gambling. Right, so we go 30 seconds, everybody. See, better than expected. We could do with all 4 events month on month of the year. That's
Financial world on demand.
going the same way.
Hear from leading economists.
This is the only kind of
policymakers,
major news event today to
industry
trade.
experts, via live and on-demand webinars, only from Bloomberg.
They look at stochastic reds.
Start exploring to see what's moving the market.
Look, everybody.
Visit Bloomberg.com webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Go. It's a bit of a mixed bag there. Look. Got good and bad. So again, we'll wait and see the move on this one. We don't jump in when it's a mixed bag, as you can see.
Good morning on TV and radio. Here's your equity market. The price action down, lower, but off the lows so far. We're down 0.6% on the S&P, on the NASDAQ 100, down 1 full percentage point.
Wait for the move.
Some housing data.
That's the group.
For more. Morning, Mike.
Morning, John. We care about this because everybody's watching to see whether the Fed is having an effect, and it appears they have. Housing starts on a month-over-month basis, fall by 0.2%. Now, the forecast was for a 2.1% decline. So I suppose you can call that better than expected. Single-family starts at the rate of 1,100,000 for the month of April. That's the annual rate. That's below March. The building permits number comes in 3.2% below the estimate, or below zero, drops 3.2%. The estimate was for 0.4%. The prior month was 0.4%. So that is a disappointing performance for building permits and suggests that maybe we are seeing some capitulation from builders. Yesterday, the home builders index came out, it plunged, and there was a feeling that maybe builders are seeing a real reluctance of people now to sign contracts on new housing. Interesting number to watch is the housing completions number. We don't often talk about that, but it's down 5.1% below March. And we came into this year with a shortage of housing. Remember, the demand has been really strong, and now all of a sudden we may end up with a shortage at the end of the year, but without the demand that would compel additional supply. So it does look like the Fed is having an impact. Higher interest rates now, over 5% for mortgages, are seeming to slow not only mortgage applications, which were down a little.
Wait and see. Let's have a look.
11% last
week. It dipped down.
That's the real number, isn't it?
Yeah.
The applications number.
Yes. People are dropping off the. They're not entering into contracts or.
Could be a nice sell that I buy off our zone. Yeah, we'll just wait and see.
Mortgage applications, Tom, down 11%. To Mike's point, we're not seeing a massive move in this market. We're down 0.7 on the S&P, on the NASDAQ 100, down by about 1 full percentage point. But that number out earlier this morning, TK, it's got to be a big story, hasn't it? We're responding to these higher mortgage costs, and we're responding by not getting a mortgage.
We mentioned this with Jan Hatzius yesterday. He's truly expert at this. This is what he did for Bill Dudley and Ed McKelvey years ago. And he said this data is speaking, and it's beginning to show changes in housing. John, I've noticed the 10-year yield now above 3%.
Yes.
That's like Dow 10,000.
320 2 Mondays ago. Then we dropped to about 284, the lows of the last 2 weeks, Tom. And now we're back again, above 3%. Yeah. A lot of people getting caught on the wrong side of this once again. Tom, Citi published moments ago, they just reflected on what Chairman Powell said yesterday when he talked about how they won't hesitate to keep pushing beyond the point of neutral inflation does not call. He said this at the end. The market takeaway is clear. This is Andrew Hollenhorst on the team at Citi. Higher front-end interest rates, elevated recession risk in 23-24, and a very negative environment for risk assets.
Right now, joining us as well, readjusting and adapting, is Seth Carpenter. He's Global Chief Economist at Morgan Stanley. Seth, whether it was Maynard Keynes or many cite the giant Paul Samuelson, who said, when the facts change, well, I change my mind. Right now, for the deciles of America, the facts are changing. How crushed will the middle class be?
I think that's the right way to look at it, Tom. The distributional effects here are very important. We've had lots of things happen so far this year. We had the end of the child tax credit. We've had a surge in energy prices, and we've had
we've got a little cheeky
food prices. And so what does that
mean? Down on there, what did they get? Not much, just 10, 20, 25, $35. Got $35 on that, and why not? I was just about the move there. It's bouncing off our baseline, but I'll put the sell in based on that news. Weekly sales, all 4 positions I took there. I'll go again if we get red on the RSI. That was kind of a risky trade because I like when I keep saying to everyone, I see these peaks on the RSI. the triangles, the mountains, whatever you want. Always a trade. Look, down, sell. You know, follow again, nothing, 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 nothing. Here, look, peak, trough, sell. Here, bang, sell. That's what I always look for. I'm looking for the shape of the RSI as well. And I got out because we were right on our baseline. It was just a quick one. The real move hasn't happened yet. So let's wait and see if there is a move. You know, it's
just such a terribly difficult job to do.
Well, and your
and this is forming the W pattern, which is what we want.
Ben Bernanke put it as almost certainty heading into stagflation, and frankly had some pretty harsh words.
You can see there, look, see the building permits were down,
they have taken and not getting ahead of this.
but up for the year, but down month on month.
Certainly we're headed toward
and then the housing starts were also better, but slightly, and then down. So I mean, say it's pretty much bad news. So the US-30 could pull up. It's forming this nice W at the moment. Just remember, you want to wait price to break this baseline, our baseline, RSI to go red, and you've got all the confirmations. And ideally for the RSI to be under that average line.
Anytime soon.
Is wait for them. Let's see.
It's going to be a rocky road.
What's the new normal in terms of the inflation rate that seems
where the
more
candle finishes its next one? We're 2 minutes to go. Let's see. Let's see if it's down. We'll just be on it a bit.
Wants to get back to 2%, but they're faced with a very challenging set of facts, which is the following: you can either bring the excess inflation that we have down closer to 2% quickly.
Down, going red. It looks nice.
Recession. Or they can bring it down gradually, which means that the realized inflation will probably stay elevated for another couple of years. That's a really difficult choice to be in. They're going to try to thread it so that they slow the economy down a lot without quite getting into recession.
Again, if we can.
For the rest of this year, for the rest of next year, and probably sometime into 2024, you're going to see inflation above their target.
One thing that you've done really good work on is oil shocks, and we've been talking all morning about the potential for $6 average gas prices in the United States as per the expectation of JP Morgan. What would that do in terms of growth? How does that factor into your
and
base
out
case?
Again, nice true scalping team. And that time, 4 positions again. I took 14, 20, 36, $50 there. $50. There we go. I mean, if you can win about $100 per news event, then you're doing well. So, not doing high margin, lot sizes, not 5. So.
Thing is, in inflation terms, if gasoline gets up to, let's take your hypothetical 6%, and stays there, those inflationary effects start to go away, but people are still paying more out of the
RSI now.
Each week, each month, each quarter, and that does continue to crimp spending.
I look, Seth, at the game forward.
There definitely is a sell.
Mid-year outlook, which I believe is delivered on Seth Carpenter's desk June 30. I don't think it matters, because what matters is July 27, which is where the Fed meetings get excruciating. Am I right on that? That the 2 meetings out is really where this game gets tough?
We'll get a bounce off heavy support, you see.
Chair Powell said for the next couple of meetings, something like 50.
And it forming back up to form a center W. We'll go down lower, right all the way down to our heavy support, but I want to see the RSI below our average line there. There we go. It's at 39. Look, it's dropping down. You could get a curl up now. Remember, the average line that gets treated as a support and resistance
quite honestly,
by the RSI.
Starting in June, the runoff of their balance sheet, are we seeing what the effects are of that so-called quantitative tightening? This is a tool that they've sort of used once before in a much smaller.
So it crosses, then you can look at sales.
They really are going to have to wait and see how that plays out through the financial markets and how it plays out in the economy.
Wait for confirmation to take the buys.
You took data dependency 102 at Princeton a few years ago. Explain to our audience the weight of data dependency to the PhDs at the Eccles building.
I mean, it's the only game in town. It's funny that the term came into existence because there was never a time when policymaking was data independent. But here it's going to become
2 minutes left on this candle.
Difficult because they're going to have to scrutinize every last bit of data to see what's going on. Monetary policy works. First policy tools, then financial.
Not bad, you know, a few cheeky little trades on that news event. Never the most exciting one, but
with whatever high frequency data they can conjure up,
forming the pattern that we want. We want a center W so we can take off during hopefully take off and regain some of these missed loss, but it's still declined yesterday. 30.
Morgan Stanley, a range of views there. Here's another one from Goldman Sachs and the Chief Executive Officer, David Solomon, in a phone interview with Shonali Basakar, Wall Street correspondent, in the last 24 hours. She's just put out that piece, this interview. We have to get rid of inflation, Solomon said. Inflation is extremely punitive, especially on those that are living week to week, paycheck to paycheck. It's a big, big tax on that part of the society. So I'm talking about recession risk, but reflecting the work by Jan Hatzius and the team in the research department.
Exactly. Reflecting on what his economics is saying, I think it's great that these CEOs are talking up the macroeconomic stuff. I want to know what he's going to do on the bond desk, where price down, yield up. I'm fascinated how global Wall Street manages this mother of all bond bear markets.
One thing he said on spreads, Tom.
Yeah.
Tom Alton credit spreads.
The RSI look just
Are we at the point of concern yet?
around our average line. The break on.
Yes, I do think we're there yet.
Go down then to our next level.
I think
28 seconds to go. It's just going to be a bounce and a turn up.
Total return, aggregate, any credit series you want, I'll let Lisa pick that, is jaw-dropping back 20, 30, 40 years.
It is. We're adjusting to rates, though.
Extra
and Lisa, I know you can build on that. Is that concerning in and of itself for this Federal Reserve? Have we seen a dislocation in spreads?
Almost center.
No.
Can companies still come to market and raise money? Peloton.
Yeah. I was just going to say, Peloton could just raise a loan with a pretty risky business model at this point that's moving very quickly. If you take a look at spreads, they're well within norms that are not scary for the Fed. People are watching it. They are starting to widen out. This is what could potentially trigger the Fed put. It's not there yet, which means that they're going to keep hiking.
Brilliant. Oh, what a drop. Got 4 beautiful sales. And they all got taken out at pips. Brilliant. That's the move I wanted. We got 40, 46, 40 and 46 again. So we managed to get $200 there.
And Jay Poloski of TPW. All of that in the next hour.
Right, so that was the move you wanted. That was it. All you had to do was just wait.
Keeping you up to date with news from around the world with the first word, I'm Rishka Gupta. Shares of Target fell more than 20% in early trading. The discount retailer cut its profit outlook, saying a surge in costs during the first quarter shows little sign of going away soon. Target's fuel and freight bill was $1 billion.
That's the center. W forming.
Pay for warehouse workers and markdowns driven by overstocked inventory. Goldman Sachs CEO David Solomon says clients are preparing for slowing growth and a decline in asset prices. Solomon told Bloomberg
perfect. Just had to wait for that candle to finish. Dropped. And I'd already got my levels preset. So it took me straight out. £40, which is about $55 per trade. So that was the move. That's what I wanted. And now we haven't got to do anything now. We can just wait. Obviously, we're sat on heavy support. And we're forming that nice W pattern.
Will decide who to punish for failing to preserve business-related messages via unapproved platforms. And the EU is considering whether to use proceeds seized from Russian oligarchs to help rebuild.
So are we going to get nice
propose
now, you know?
joint debt. Ukraine's foreign minister Dmitry Kuleba told his European
maybe for the open, see if it breaks any lower.
Reached some $1.1 trillion. And the board of Twitter says it plans to enforce its $44 billion agreement to be bought by Elon Musk. Directors voted unanimously to recommend that shareholders approve Musk's bid of $54.20 a share, almost $16 higher than where the stock closed out on Tuesday. The board statement came as Musk appears to be...
Nice, that's such a quick move, you see, that I wouldn't have been able to end those trades myself, so that's why I had it preset.
This is Bloomberg.
On anti-markets. So we managed to do 4, 8, 12 trades altogether on that news.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be
RSI 29, so if it's at 25, we'll go again. It's going to break that level, but right on our dotted breakout zone, which we know we don't want to touch. A blue zone as well, so we just need to wait.
But there's a significant unseen cost to the modern era of global commerce.
That's a nice. We're going to get a second leg.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these?
What did Daz do on that news? Look. Again, sell. So NAS as well, or hold on news.
We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I like to trade the NAS with news related. You can't say now it's over now, so you know, limited period of news events before the market does what it does. We're on heavy support now. We're looking to try and catch a pullback, but we've got to wait for the stochastic to go green and the RSI to pull up again. If the RSI goes lower and breaks our heavy support, then obviously we can make sells.
Breaks down into a friable mix that can be mixed into your soil in the ground.
Next levels. Give movement. See. Arrow. I don't know where that's going to go. We've got the New York Open in about 40 minutes time. Good. And that's our stream done. We've yeah, almost 15, well, about 15%. Really good day scalping.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in
Don't give it back.
our lives, for work, for learning, for communicating, for staying in touch.
Putin's war is, as we all see, heavily disrupting the global energy market. It shows on one hand how dependent we are on imported fossil fuels. We must now reduce our, as soon as possible, our dependence.
So we've done about 35 trades today.
There's van der Leyen, who is really quite something.
Well, the trades, but good, because we know there wasn't many news events, just the opens to trade. We just traded this news event, and then, like I say, for later on in the group, we'll do the EIA, crude oil, potentially. That's it. Then tomorrow is our favourite continuing jobless claims news event. And we've got existing home sales as well, if you want to trade that. Jobs one's the main one. And Friday we've got basically nothing really. We've got a PPI for the euro. We're open, that might help us with that, but we don't bother with the UK news and confidence. So yeah, pretty much it's a quite a week for the news, but still take advantage of watching US-30 up to see if it's going to break.
That's the margin for refining, and one of the big questions here is,
Is it going to break? Got a minute left on this candle.
do they have the capacity to turn it into gasoline and some of these distillates?
RSI is creeping, 29.
For the 12 people that just drove off the Garden State Parkway by some refinery in New Jersey, is it done? I mean, is there any incentive with this record margin to make the distillates, make the stuff we use?
That's the question for Javier Blas, because right now it feels like it's very tough to do that.
Nice, Segui, Pretty Gupta there on the movement to Mr. Blas. Let's go to Javier Blas with his true global expertise. Javier, I want to talk about China. I guess they're coming off lockdown.
5:28.
Look at Blas economics,
25 seconds to go. Is this going to break or we're going to have a bounce? Important zone, this one. Decent resistance. Support. Now it's changed to resistance, you see. But under it, is it going to finish under 10 seconds?
Prices for gasoline in the United States and $115 for WTI is because China has not yet opened up. China opens, it's a lot more fight for crude oil and gasoline worldwide, and it means higher prices.
There's a blue zone, so yep, don't touch anything, don't do anything. Definitely don't enter a sell. Straighting, I know, but when them blue zones pop up, you know what they mean. Get out of the trade. If it disappears and the candle finishes, then we're in. If it stays, then we don't do anything.
What are you looking at in terms of
historic
potential
support
prices?
or
Because we
resistance.
are seeing, for example, refineries not
Automatically
keep pace
for you
at
is what
all,
happens.
which seems to be the real big issue. Not
Stops you
just fuel
taking the bad
prices.
trades. Yeah, everything else was lined up, looking good. Unless that appears, it's not a sell. We'll wait.
Just sending a misleading indicator of where the market is. You look at WTI, we are at $115. If you look at the wholesale market for refined products, gasoline, diesel, and jet fuel, we are somewhere between $170 and $230 a barrel. Depends on whether you're looking at gasoline or you're looking at diesel. At those levels, we should start to see some demand destruction, particularly in emerging markets.
Still
and we are beginning to see that.
there. Next candle, you see, just pull back a little bit. That's why you don't take the sell. You know, candle is against a points of interest line, neutral resistance line, trend line, breakout line, or blue zone. You don't take the trade. Sounds like a lot, but it's not. But it just stops you making mistakes. If you take trades near those areas, there's always that chance it's going to reverse on you as soon as you take the trade. And that's the biggest thing I get told to me is, oh, I enter the trade, and as soon as I do, it goes against me. And then I check and see where they've entered, and they've entered too close to a zone. So
We are seeing operating rates already in the Gulf of Mexico around 90%, which is very high for this time of the year. We usually see lower operating rates because they are doing seasonal maintenance. So I'm not expecting that the refiners are going to work harder than they are. I mean, any refining executive today is trying to run their plants as hard as they can because the profit margin that you could make is just unheard of. I don't think that anyone in the American refining industry has ever dreamed to see the 3-to-1 refining margin north of 35, 40, let alone $50 a barrel. I'm not expecting that refiners can do more, so we need to bring demand down, and the only way to bring demand down is through higher prices.
Javier, my amateur take is the spread between West Texas Intermediate and Brent is $4, $5, $6. It can move around. Right now, American oil is 70 cents more expensive than Brent crude. Why and which one moves back to normal?
I think that we will see at some point Brent coming above WTI again, but at the moment, what we are seeing is American refiners are buying as much crude as they can because they can make a ton of money refining that crude, and that's why we see so much pressure on WTI. It's pressure from the refiners, try to grab the barrels, and then refine them to profit from a huge refining market.
Meanwhile, Tony Blinken, just returning from his trip to Abu Dhabi, what do you think the ask is from the U.S. in 1-800-CALL Doha or 1-800-CALL Abu Dhabi?
Well, the U.S. has been asking for a long time for both Abu Dhabi and Riyadh for more oil, but the main problem is just, you know, the White House has an ask.
disappeared, look. So nice sell.
And Saudi Arabia do have also
I jumped on that. Next one, 226, look. RSI's 23, it's gone bright red.
And the result is that we are seeing OPEC production increasing very
Perfect.
slowly. But even more barrels of Saudi oil and
Take
UAE
another
oil
sell
in the
there.
market today. Those barrels need to be refined. And really the bottleneck right now is on the refining sector. More OPEC oil will help, but they're not going to bring gasoline prices for consumers immediately down.
Javier, a chart I have of Saudi light, and I adjust it different ways, but it goes back to the 1950s. It literally spans Daniel Yergin's.
Now it's come as our neutral, so resistance for the day. Pretty cool.
In 1986. Is Saudi going to crush oil again if they have to break OPEC?
if they have to, they will do it. I mean, they have demonstrated, Saudi Arabia has time and after time demonstrated that they are willing to do whatever is needed to keep
So this is our daily pivot now that it's broke.
position right now is
Important level. See with a breakout zone.
production is approaching an all-time high.
Nice resistance.
On an average, on an annual average, 2022 is going to mark the highest ever Saudi oil production. So
Nice sell off this.
The ability to really be in command of this market. If they
Made the move, ranged,
at the end of the year,
went to a range, dropped a little bit, bang, retested, down she goes.
And control prices. But there is no much they can do right now on the upside, I'm afraid.
Javier Blas, thank you so much. Just wonderful to visit with you as always. Of course, his wonderful book, folks, out on oil trading as well. Lisa, what a day. I don't know where to begin.
I think that it's all about the consumer. It's all about pressures, and that's why this is the great story to really end on.
30 seconds to the next candle.
Filling up their tanks. Right now, gas prices, to build on what Javier was talking about, reaching the highest on record in the United States, at least on a nominal level, $4.57. How high could it go? How much does this crimp the people's budgets at places like Target and Walmart and reduces the pricing power of these retailers? This is the new episode of the economy that we're entering into.
That is a AAA average price, folks, including cheap fuel in the Midwest. I think it's a little more expensive on the right and
California,
left coast.
you think?
Stay with us. Bloomberg Radio, Bloomberg Television. Good morning.
Go, next candle, popping up. And again, beautiful. Nice move down, perfect. Waiting for now. Grab a quick coffee.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft.
I'll be back in 5-10 minutes. Just a coffee. I'll leave you watching the US-30.
SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Margins under pressure. Live from New York City this morning. Good morning, good morning. Your equity market is heading lower. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Margins, we have a problem.
Today is a great example of consumers pushing back on higher prices. And
it's really impacting retail earnings right now.
They're saying you can't raise prices.
As people have a tighter labor markets, and yet if people are spending less.
The consumer balance sheet remains at a low level of leverage.
Global supply chains are under a lot of pressure.
The tail risks could be getting bigger here.
Markets are pricing in the fact that we are trying to destroy demand effectively.
We wanted to see demand cool off a bit to balance things, to bring inflation more under control.
So far, we haven't seen it.
It's sort of what we were hoping for, but also a little concerning on how much this raises the possibility of recession.
The window for soft landing is really getting narrower and narrower.
Joining us now to discuss Evercore's Julian Emanuel and Jay Poloski of TPW Investment Management. Let's get straight to you, Julian. Just how many targets are out there?
Look, it's very clear that particularly when you're interfacing with the consumer in a labor-intensive industry, you're going to encounter these issues. But what we take away from this morning's reports and yesterday's is the glass half full aspect of it, and that is that the consumer remains strong. Yes, there are margin issues. Yes, they're going to be persistent. But no, the weakening that many have expected is really not materializing just yet.
So, Julian, how can you say that when Target's down 24.65% today and Walmart was down more than 10% yesterday?
That is, again, that stock price reaction in an environment where if you say anything wrong, whatever it is, and obviously margins and labor costs have been the key words to exert pressure on stocks, you're going to get that reaction. More importantly, John, is the idea that despite the fact we saw what we saw yesterday, despite the fact that Powell doubled down on hawkish rhetoric, the rest of the market traded okay.
We can build on that in just a moment. Here's the line from the CEO of Target. I think we're all surprised he's surprised. I felt like this yesterday with Walmart, and here's Target this morning. Throughout the quarter, we faced unexpectedly high costs, driven by a number of factors, resulting in profitability that came in well below our expectations and well below where we expect to operate over time. Jay, I want your view on this. Are you surprised that they're surprised by something we've been talking about for 12 months?
Well, it is a little bit disconcerting, right, John? Because certainly in the markets, we've been discussing this for some time. But it is, I think, as Julian mentioned, kind of idiosyncratic to certain companies, right? Other companies have done well and have managed better. And so you're actually, in my view, I'm not a stock picker, we focus on ETFs, but you're actually having an opportunity to differentiate between companies that are able to manage through this process and companies that aren't. And therefore, the market should reward the ones that do and penalize the ones that don't. And I think that's what we're seeing play out. On a broader picture, I would just note a couple of things. First, we've just gotten through earnings season. Q1 better than expected around the globe, US, Europe, Japan. Earnings revisions indicators actually turning.
And we're back. Yay, coffee's topped up, everybody. All right. Had that nice little move. Sell on the US-30. You can see the blue zone came to our rescue. It was out the trade again. So that's great. And now we're just going to wait for the open, having a look what's going on the rest of the markets.
Because they're able to pass through, to an extent, certain increases.
Justin has joined us as well.
I think that's what we've seen.
I am here. Sorry, I'm tardy. I was running until midnight last night.
Party on.
Yeah, far from a party.
Yeah.
More like work, but I made it.
Well done, mate. Well done.
It was a nice sell-off on gold at 2100, which is the Asian session we typically watch for the move. Then we rose back up to 1820 throughout the London session. Beautiful moves on that. I know you're not watching gold right now, but
look.
That's my preferred medium.
Nice on news from the US buildings news. Let's have a look at and NAS has done exactly the same, pretty much.
In the commodity complex, we've been quite bullish. We've had a double overweight since last year. We're on the view that
nice.
Focused on not increasing capacity. So
nice sell off this morning on gold. Look at that.
We're able to use that capacity fully. Javier was just talking about the unprecedented refining margins in the energy space. And on the airline side, again,
really just waiting for a break. Could have taken that buy there, I suppose, but it was risky because stochastic was red and you're below the trend line, but I nipped in on that. But on here and it breaks, that's quite good. Oh, that was definitely a good sell.
People do have money
but
and they want to spend it and they want to travel, and so you do have
you following that. As the RSI came out of the zone over the baseline, first and wait, you get that bear signal, that candle, one look, that'd be your entry. Kind of dipped up, look, back out. You might have been able to spot going back in again. You've probably gone back in on that one as well. So there's probably 3 positions that are taken there for everyone was watching gold.
Definitely a couple good scalps on a couple of different moves.
Something you and I have talked about in recent weeks is that long term we think active management works. This is a market of identifying stock ideas. They exist across all industries. You know, not all consumer staples names are created equal. Same with industrials. You really have to dig down and
rising costs, nor at big retailers. Yeah, that's the news.
Management is telling you who has the pricing power and who has margin pressures.
Gotta love it.
Behold, the stocks that have had
inflation everywhere. That's the problem, isn't it?
Consistently over the first half of the
Target tanks on weak margin.
Through the second half of the year.
That stock 25% down. Ooh.
They're down 24%.
Yeah, every single one of these Fed meetings, you get the news and the press after. It's like the Fed's committed to taming the inflation. Yeah, right.
The target store's pretty big then in the US.
Yeah, very big. It's like the you got Targets and you got Walmart's. Walmart's like your budget box. Target's like your high-end department store.
All right. Yeah, of course we've got Walmart here, Asda, Walmart,
yeah.
Same. But yeah, we don't have Target over there.
Hey, John, well, they always say don't fight the Fed. Jerome Powell's message yesterday was do not doubt the Fed either. Do not question the Fed's resolve
do not doubt him.
Inflation, even if that means ultimately getting restrictive when it comes to interest rates. So obviously the market trying to digest this. Stocks were actually higher in the face of his remarks yesterday, but futures lower now and a little bit upward.
You should have expected this when your government stimulated the economy. What, a year and a half ago?
Yeah.
You gotta get that back somehow.
Bring it back, yeah.
Oh, they're giving us a stimulus. Yeah, you're gonna pay for it.
And most people
paying for it now.
Most people chucked it into Robinhood.
Is ultimately going to get to as it fights inflation, running at hotter than 8% on CPI, and policy clearly that is running very far behind the curve.
Still dropping a lot.
From Jim Bullard of the St. Louis Fed yesterday, who said
US-30. I thought there was going to be a center. You know, you're looking for that W. It's not happening. Still on its way down. RSI still 20. Stochastic's green. Could dip back red. Going down even further.
On the Fed funds rate through the
remainder grab back this real quick. I'm just going to mute.
Hawkish expectations don't stop here in the U.S. The market also sees 127 bips from the BOE, 111 from the ECB, which hasn't even actually lifted off yet. And of course, we are going to get more Fed speak throughout the coming week. You have Philly Fed's Patrick Harker later today. Then you have Kashkari of the Minneapolis Fed tomorrow. And then a week from today, John, the minutes from the May meeting. What clues will those minutes hold, John?
We can't wait. Kaylee, thank you, as always, for the Fed speak through the week and into next week as well. I want to go to a quote from Goldman Sachs and start thinking about the difference between a 3-month view and a 12-month view. This is what Goldman had to say. We downgrade equities to neutral for 3 months. They remain overweight for 12. The stagflationary macro momentum means multi-asset portfolios are likely to remain volatile, with both equities and bonds vulnerable. We remain overweight cash. That's Christian Muller-Glissman there leading that coverage. Jay, I want to explore an idea with you that's developing at the moment. A 3-month view. This is the idea. There are some people who believe that this Federal Reserve wants to see a further tightening of financial conditions, and any rally in the equity market would be perceived as an unwarranted loosening of financial conditions that they would have to push back against. Now, I want to understand from your perspective whether that puts a lid on risk assets and equities more specifically as we work our way through this summer.
I think that's an interesting question. I mean, Goldman Sachs has been splitting hairs both on their targets for prices, stock prices, as well as growth here these last couple of weeks, going back and forth. But you know, your question's a good one. I think over the next couple of months, what we're likely to see is declining inflation, significant declines of inflation over the next couple of months, as well as stable growth. I mean, the market, as I see it, is divided into two camps. One who believes inflation is out of control,
we're getting that push
Deutsche
down.
Bank and others.
The housing
Second,
building
who are very
news
worried about
dropped the
recession.
market.
And I think there's a middle path.
They were stochastics
Middle
green,
path
so it's
where
waiting.
rates,
We'll go if
inflation
stochastic
comes
goes
down,
red, you can
growth is
re-enter.
okay, and we
This
take
is,
that
you just don't know if
3-month
this is
view,
going to
extend it
just
into
bounce up on
year-end,
this one. You've got
inflation
30
around
seconds left on the
4%,
candle.
growth between
Better to
2.5%
wait and see.
3%, nominal growth of 7%. And we've talked about this, John. I think people are not understanding that nominal growth of 7% or so is double nominal growth rates that existed pre-COVID in the 5 years between 15 and 19. And so earnings estimates are going to be easy to beat, and that is going to support equities. Whether the Fed acts as a cap, I take it from yesterday that the market has priced in an aggressive Fed. And the fact that the 2-year peaked several weeks ago, bonds have rallied in the midst of the inflation numbers over the last couple of months. I think the inflation issue is priced in. A hawkish Fed is priced in. The growth question, I think that's where people, smart folks who I'm talking to, that's the concern that's starting to grow.
Julian, do you agree? A 2-year right now, 272, highs 285, 10-year just short of 3, the highs 320. Your view?
So if you think of all the noise of the last week or so, particularly, again, Powell's comments yesterday, and you look at the fact that yields basically backed off that high at 320.
There it is, you see.
And have been, you know,
The good thing about having the stochastic, stays green, you're not tempted to sell, and then what happens, it just backed off. Didn't break that points of interest lines.
But also, we don't
2 minutes left on this candle, 15 minutes to the open.
Stock prices in any way, because the issue there is, John, it doesn't happen all the time, but the linkage over the last 40 years between tops in markets and bear markets and the onset of recession, and the Fed does not want a recession in our view, that linkage is far too robust to specifically target stock prices.
Julian, I'll put it a different way. We used to talk about the bond market and any sell-off there being self-limiting. The yields would rise too much, they'd eat into the economy, the Fed has to back away, yields have to back away too. There is just a belief now, and I understand that you don't share it, that some people believe that any rally in risk assets is self-limiting because it's a rally this Fed would have to push back against this summer. Do you disagree with that?
We do, because again, and the chair's commentary is a comfort with tightening financial conditions. However, if the inflation numbers started to come down to a level that made them significantly comfortable, and again, this is a process. We're still looking for 3% on core PCE this year. I think most of the street is as well. So it is a process. But if inflation started to come down without more tightening in financial conditions, I think that's an environment the Fed could live with.
Julian, you're going to live with us too. You're going to stay with us at least for the next 20, 30 minutes. Jay Pilowski too. Let's get you a look at some of the stocks ahead of the open in about 17 minutes away. Here's Abby.
John, well, we have to start with the one you've been talking about all morning, and that, of course, is Target, right now down more than 24%. I've gone through the price action by hand, and it looks like Target is heading to its worst day since October 19th, 1987. So very similar to Walmart, a similar story. Rising costs really pressuring operating margins, in this case by 200 bips. light on rising costs. And the degree of these stock declines for both Target and Walmart yesterday shows just how off guard the street is caught by this. Similar, it sounds like, to CEO Brian Cornell. And it seems that big box retailers finally unable to manage rising costs and inflation, a topic that we've been talking about for months. Lowe's down 3.3%, a small sales miss there, weather being blamed on the slowdown. That obviously was not the story for Home Depot. Netflix down 1.9%, a representative of mega cap tech down. I don't know how mega cap Netflix is at this point. Plus, they did fire people yesterday. And then Twitter, a brief reprieve yesterday from the selling, but there still is no deal with Elon Musk. That stock down, once again, down 0.8%.
Abby, thank you. As always, coming up, a geopolitical turmoil raising the cost of living around the world.
A sequence of shocks like this, which have really come one after another with no gaps between them, is almost unprecedented.
That conversation up next.
European down now. Yeah, see now we're sat to zone, so again wise not to take the sell. Did flip a little bit red there, look. I would have waited for the break. Blue zone, you just gotta wait. It's we're getting a nice, you know, this could be this on the open. We're either going to go lower to our next support level, or going to flash up to our neutral daily pivot for the open. So whichever is a good trade. We're talking 40 pips to the upside, and we're talking a potential of about 30 pips to the downside. So we're going to go for 5 to 10 per trade. So again, matter to me which way. We want confirmation of the direction so we can get in there. RSI is still in that 22 low zone, so got to be careful.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
See the weakness candles now. We've run out of steam on the sell. Need another catalyst, which is going to be the open, take us lower or a bounce up. So ready? Finger on the buyers actually, but you never know. I'm only trading 0.5. Going for multiple trades, multiple positions on a smaller lot size. You know, 5 is enough. No matter what account size you've got, that's a safe.
If we can do so, we will
it gets you 50 cents a pip. All point. Obviously 100 is 50. I'm looking for each of that, so 40 or so.
This was Brian Deese of the National Economic Council. Take a listen.
The reason why we have that challenge is Putin's decision to invade Ukraine and the implications of taking Russian supply of crude oil and natural gas, but also of Russian refinery capacity off of the global market.
Targets the main one. In its forecasts.
Was tight prior to the invasion, but the real
retail earnings, European inflation entries right now later.
A direct result of the war in Ukraine and the impacts on energy markets.
Joining us now, two friends of mine, two friends of this show. Anne-Marie Hordern, down in DC, from London. Guy Johnson, AMH, first to you. Gas prices, that's the big issue.
Yeah, it is. And this morning we have another record. They're above $4.50 on the average. And you look at some counties across America, one in California particularly, is looking at higher than $7 per a gallon of gasoline. Wow. And Jonathan, we should note, we are not even at the start of peak driving season. So gasoline prices is one big problem for the administration.
$7.
You also have, as recently, earlier this month, the agricultural department talking about the fact that food prices will rise 5 to 6%. And then on top of all of this, not so much
ATI, like I said, we got a nice win on this
families, Jonathan, that have young
last night.
Infant formula shortage, and in a
We've
week's
got the
time,
EIA inventories coming up later on.
Get to the bottom of why families are facing this. So a number of issues dealing with everyday Americans, kitchen table, whether or not they're feeding their families or filling up their gasoline pump, and this is really impacting some of the hurdles the administration is facing
wedge
as we are heading
nice support as well for RSI could back up with a stochastic, so yeah, good setup.
9%. It's amazing. John, we haven't had inflation this high since 1982. Thatcher was in control then. She was trying to supply side reform the economy. We haven't had inflation this high, and it's going to get worse. John, everybody is pointing the finger at everybody else, trying to blame them for what is happening here. We had it from the Chancellor yesterday. This is international. This is rising energy costs. The Governor of the Bank of England saying similar things. We're going to hear from the Chancellor again tonight. Everybody is pointing the finger at somebody else. But ultimately, central banks have missed this. Governments have missed this. Hey, if Target and Walmart miss this, you've got to worry about central banks' ability to be able to manage the situation as well. John, we are way off base. 6 months ago, the Bank of England was predicting that inflation right now would be half the level that we have now. We're heading for double digits. It's going to get worse from here. And as Anne-Marie was pointing out, it is very regressive.
Guy, I'm really looking forward to the coverage in about 40 minutes with you and Alex Steele. Thank you, buddy. To you as well, AMH. Here's something the politician won't tell you. This note from JP Morgan on gas prices. Right now, the average gas price in America about $4.60. JP Morgan say this: a cruel summer with US gasoline prices breaking above $6. Typically, refiners produce more gasoline ahead of the summer road trip season by building up inventories, but this year, since mid-April, inventories have fallen counter-seasonally. Julian Emmanuel, Jay Pawlowski with us for a final word. Jay, if that developed, would you have to change your view?
No, I don't think so, John. I mean, one of the things that we need to keep in mind is that the amount of money people spend on food and fuel relative to, decades past is much smaller than it used to be, and it's risen somewhat, but it's still not anywhere close to previous.
7-8 minutes to go, everyone, and like I say, nice weak candles. You like to have US-30 sat where it is now, so perfect. Stochastics just pushing up, RSI's in the zone, so this is good to go either way. Want that nice little move. Finish our stream and today's trades.
They feel that Ukraine is doing well enough on the battlefield.
Especially as everything is looking bad, this could be a continuation of the sell. Listening to Bloomberg.
At the same time, Russia clearly needs to be able to continue to sell their energy where they can. And so you saw that chart on the natural gas in Europe. It's while all this talk is going on,
Bloomberg is good for background noise.
We're down about 50% from their previous high.
You're gonna have to get wind power for your truck, bro.
This
yeah, man, I need to.
Early in March, and so to me,
I wish that was possible.
Right, prices.
Because I'm sick of paying $1,000 to $1,500 every time I fill up with diesel.
Investment basis. I don't think that's the big picture. I think the big picture, arguably, is
and that's
that
a daily deal.
Into a higher price point in energy that's probably going to be sustainable, but it's not going to be.
US starts building permit stall as mortgage rates bite. Yeah, and that's why we had the drop.
We actually would place a little bit more importance on.
You can get the reversal. It went with the news. There we go. Look, here's a little move. Stochastic, nice.
Remains fragile, and to us, if you get a further.
We're close to the open now, so don't do anything. Don't be tempted.
The average price is $4.50 now. Probably $5.50 is sort of a yellow.
Few more candles to go.
Could tip us toward a slowdown.
I'm loaded in with the broker. Yep.
Very carefully this
Julian, thank you, mate. Perfect timing too. Julian Emmanuel, Jay Pawlowski, to both of you. Thank you. Coming up, the morning calls, and later, Wall Street finding some comfort in hedging amid surging volatility. That conversation with Laurie Calvasina just around the corner.
We've got no more news. Okay, apart from oil, gas. Right. European index is down. Futures pointing, well, the index is up, means it could reverse. Everything is well over that 1%, 2% zone. Be interesting.
When you think space, you probably think one space agency that travels under the radar is ESA.
Candles to go, and like I say, we need the RSI to be green as well as the stochastic pointing up to any buys to be safe.
We've collaborated with pretty much everybody who is involved in space exploration.
Then we've got our neutral area there, you can see the blue line, and our breakout zone, the red dotted line. Again, they're areas backed up with a blue zone, decent resistance. Any buys, watch out for those.
Human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Pushing up, still up slightly, pull back, wick exposed.
Equity futures are negative here. Here are your morning calls. First up, Bernstein upgrading Monster Beverage to outperform, expecting growth to re-accelerate over the next few quarters. Your second call from Guggenheim cutting its meta price target to 250, forecasting a weaker revenue growth amid increasing competition. And finally, Truist downgrading Target to a hold, expecting shares to remain under pressure after cutting its profit outlook. We're down there by almost 25%. Coming up next, Lori Calvasina saying valuations are no longer the problem. The opening bell just around the corner.
Let's do this.
Two minutes.
Yep. So it's pushing towards our typical. I don't want it to be too close to our blue neutral daily pivot, of course. Still got a potential of 20. Serious area. This is where it could be, you know, this is where it forms the second leg, or another center, W center there. Don't know. News being as it is, we could come all the way down to here. Look at this. You know, we've got areas here. So at least we're above this trend line. We broke the trend line. It's going to retest it before bouncing up. We're going to get a retest now. Zone and then down. We go up, hit that, bang its head, and then down we go. That is highly probable at the moment. Good luck everybody, and like I say, try and get those 5 to 10, 50 to 100 points, that's what you want. Yes, it does spike and hit that and bounce down. The sell wants to be a quick in and out.
As farmers hunt for alternatives, fertilizer helps increase crop yields.
And remember, this is not financial advice, it is entertainment only. Our results are not typical of anybody's.
We're strictly entertaining ourselves.
We've got 40 seconds left. Good luck everybody. Wait for the move. Remember that. Wait for the move. Happened on that news. I got a few cheeky scalps, but it wasn't really the move. And then the move happened. Boosh. We got the sell. You know, on that housing builders deal. That's what you got to do. Is wait. It doesn't shoot up a million miles an hour. Then you just wait. 20 seconds.
deflation is a terrible thing. Inflation.
Loaded in, yeah.
Tesla will be in the pole position to
Hey, here we go. Let's see.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front row, the best seats in the house for business's greatest minds.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Move, nothing yet.
I think that it's hard to put your head around the
candle.
narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears?
Nice little pop up on gold.
Yeah, gold's moved. One's 30. 33, 34. Not negative anyway yet, Jonathan.
It's about to get absolutely hammered. On NASDAQ futures, we're down by 1.5%. From New York City, for our audience worldwide, the opening bell rings in New York. Switch up the board and get to the market yields. Just a little bit lower, by about a basis point to 297.87. In the FX market, the euro just a little bit stronger. Euro dollar negative a third of 1%. The dollar
You just got to wait. You're sat right on support.
19. And outside of that story in the commodity market, up about 1% on crude, 113.53. A lot to look at around the open. Let's get to Abby for more. Hey, Abby.
Hey, John. Well, indeed, a very brutal day for Target, the worst since October 19th of 1987, absolutely plunging down more than 24% at this point.
It's still wide in greens.
Walmart down for
and RSI is dipping down. Still not a sell yet.
Cost, these companies not able to manage this finally. So for the quarter, Target's operating margin of 5.3% coming in way light of 9.5%.
It's looking bearish.
Down to 2%, excuse me, by 2%.
Cat dashboard is saying bearish.
Massive miss, and that stock absolutely getting punished. TJX companies, though, on the other hand, a bright spot.
This is going to break. We've got 1 minute left.
Interestingly, they missed sales slightly, but their profit outlook held. They actually raised it by 20 basis points. So again, a bright spot. Yesterday's bright spot, though, John, big tech, really not happening today, down 1.4%. That is the big anchor yesterday for stocks. Today, it's dragging in the wrong.
Back on that zone. Look, it's spiked down, but.
Abby, thank you. We're down about 1.2% on the S&P 500. Outperformance on utilities up by 0.2%. As Abby just pointed out, information technology down by 1.4%. Consumer discretionary
30 seconds left.
2.9. Twitter all over the place once again, as we often do now. Let's get to the West Coast and catch up with Ed Ludlow. Hey, Ed.
Good morning, John. We're down around 1% on Twitter stock, trading $37.94 as it stands. The latest development, the board of the company issuing a statement to Bloomberg saying that they are committed to the deal at its original terms. Elon Musk offer of $54.20 a share, valuing the company at $44 billion. They reiterate that they recommend to shareholders that they go with that deal. You look at the spread, and you come into my Bloomberg terminal, the spread on this deal is wide. We track this because it gives us an indication of the probability Wall Street assigns to the deal.
buy on gold.
But as you know, John, looking at this stock now down 0.9%, we've reversed the direction that we were going on Tuesday, where we saw gains. Bloomberg also reporting on Tuesday, John, that 3 high-level managers have left the company. And a last interesting one, I'm just looking at the Bloomberg. Only 8 out of the 37 analysts covering this stock have raised their price targets to $54.20.
Ed,
another indication of what we feel about it.
Got to leave it there at 38, 37.96 for a moment. Now about 38. Ed, thank you, buddy. A couple of moving parts today. We'll stay on top of the stories for you. We've got Target down about 22% at the moment, and a headline from Secretary Yellen out several minutes ago. Back to DC now. Let's catch up with Anne-Marie. AMH, what have you got?
Well, what we're hearing from Secretary Yellen is that, Jonathan, there's no final decision yet, but this license on Russia and their ability to pay debt, likely, potentially, that could end. And if this is true, what Secretary Yellen is saying, and it confirms a Bloomberg scoop by Saleha Mohsin yesterday, saying that the Treasury Department was leaning towards this. There's basically been a carve-out. They've been allowing Russia to pay their debt in dollars. And what they potentially are going to do now
One sell already. $8.
So that would end, and it means that Russia at this point would be in a very difficult position. They owe about $500 million on these debts towards the end of June, though some of it potentially could be paid not in U.S. dollars. Yesterday, we heard from the Russian finance minister saying that they will pay their debts and they can pay them in rubles. But John,
and we're out. Yay! All done. We got went for 8 positions on that. There you go, all done. So,
it's going to make it very difficult.
A very unique situation. AMH down in DC. Anne-Marie, thank you. Looking forward to your coverage on this story.
Another 1, 2, 3, 4, 5, 6.
We're about 3 or 4 minutes in. Yesterday it was Walmart. You've got a second day of it. Today it's Target. That stock is down by 23%. Cutting the outlook for profit. Things do not look great for that name at all. Katie Lyons back with us for more. Hey, Kaylee.
Things look brutal, in fact, John. Target potentially heading for its worst day since 1987.
Had to jump in, just wait for that candle. And again, you go again. You go again. We've got 40 seconds. If it breaks below this points of interest, we go again. If it bounces, then you're looking for buys. But at the moment, stochastic is pointing down red. RSI is also red and bright red, so we'll be coming down further. For me, that's a good one.
Traffic in the first quarter was actually up nearly 4%.
About 100 and nearly about $180 there. 5 minutes of trading. See what happens now.
At the same time that demand has receded for some of those bigger items. So the point is, while there are more shoppers, they are buying and spending less, and it's also a matter of the mix, what they are spending on. Target essentially dealing with the exact same forces Walmart detailed yesterday. Food and gas inflation is drawing money away from discretionary general merchandise.
NAS was the same.
Typically higher margin.
It said it was pop up on gold. Gold was a bit rangy look though.
Yeah,
it is rangy.
So the neutrals.
Yeah,
so the
back the night 10 minutes going broke.
Labor issues that you are facing, and it's not like things are going to get
NAS was also very rangy look, hasn't done anything yet. So the US-30 is probably the easiest one. Just got a kick up look, see? So again, you saw a blue zone, it bounced off there, always wait. This could still be a sell, let it form. Definitely another sell off on the open. So I mean, yes, wait for that first candle to range around.
That name is getting absolutely hammered, down about 24%. Outside of that, in the bond market,
nice drop, and then it retested it.
Down about a basis point to
and then we're up. Now we'll wait and see what happens here. Look, again, stochastic is nice and wide. We just want the RSI to dip down, point down.
Mondays ago on a 10-year to about 298, just short of 3% right now. In the equity market, we pulled back by 1.24%, just to give you the sector breakdown. Consumer discretionary down by 3 percentage points.
Breaks that points of interest, so it's a buy. It's forming that W, but it's not doing it at the moment. It's going to come down. Look.
That's where you get a little bit of outperformance, where you get a little bit of green. We're positive down.
Let's push up.
About 1/10 of 1%.
Get fighting. First 15 minutes is what it's all about.
The S&P 500
Bear
is currently
on the daily calendar, bearish and falling as well. 59%.
To price in a recession. I'm pleased to say that Laurie joins us now. Laurie, let's go there. What are we pricing in?
We're pricing in a growth scare. We're pricing in a near-death experience where everyone frets, worries very deeply and legitimately about the end of the cycle. We've seen a number of these episodes before. If you go back to the financial crisis, there have really been 4 different ones: 2010, 2011, 2015, 2016. Remember, that was the industrial earnings recession, which did not result in an economic recession. And then we also had the late 2018 debacle, where we had quantitative tightening from the Fed, a lack of faith from the Fed, and fear that China and the trade war was going to
Wait, that's the key.
And those drops all saw 15%
Sit on your hands.
drawdowns
Yeah.
in the market. We've gotten very close to that 20% threshold, sort of the outer bound of growth scare territory.
We got 7
and I
minutes.
think the market is,
Stick around for a little bit longer.
find a bottom in here. There's a
I
lot
got a
of
conference call
uncertainty
coming
in
up
this market
8:45
right now,
my time.
whether or not the recession is going to come through, or if it's going to be another near-death experience. And I think that's why it's trying to bottom, why it hasn't broken, farther.
Yeah, we're going to go another 5-10 minutes, and that'll be it.
Very, very important tell. And I think the
I
market
just want to see what this candle's got. 14 seconds left, 10 seconds left on this candle. It's an indecision candle, so we're going to go with it.
18 as well. You went through the performance over those periods. Talk to me about the valuation, the kind of numbers that we had to drop to before the buying really started to rebound in a major way.
It does feel like when you look at multiples that they tend to bottom out in very different places in very different cycles. I'll tell you from a multiple perspective, what we found to be the most useful exercise is to go back and look.
Beautiful. Straight in again. That's it for me. I tell you, that's it. I just grabbed another. Got 2 more trades there, and it took me out at £38.28. So 50, 60. So yeah, about another 100 there. And again, I was in and out as soon as that candle went bright red, and that's what you got to do. Jump in, wait for it to pull back a little bit, and then enter.
90-91 recession.
It's the whole thing about the axe system.
Those are obviously much
2 more cells.
The pandemic was also much deeper. I think it was in the 40s. So I think
Matt.
that, we sort of look at the multiple
I'm waiting for gold to break this 1812, 1813 zone before I re-enter.
right in line with kind of those past Fed, kind of extreme tightening periods that didn't necessarily.
We had the RSI, as I said, tipped down, plastics down and wide, price action broke the level. That was a nice, easy trade to take, that one.
But it's not going to that next step yet from a multiple perspective and pricing in a recession. The problem when you're assessing multiples, John, is you have to figure out what kind of recession is it going to be. Is it going to be a milder one like 90-91? Well, that one was only about a 20% contraction. That's pretty much in already. But if it's something nastier, there's probably a longer way to go. I'm personally in the camp that we're not going to have a recession, and if we have one, it's going to be short and mild. But if we're wrong,
now it's the same. Justin's on gold at the moment.
A question I hear a lot of.
Waiting for the move of the RSI. Look, doesn't do anything yet. Stochastic is down. RSI is not there. The average line's here. Got a neutral support. Going to bounce off the trend line. Yeah, buy. Probably.
It's just trapped in between those two blue zones.
You can see the stochastic pushing green. The RSI coming up. Maybe it's going to bounce off here and our baseline up.
The worst spikes that we've seen, even around some of these growth scare periods. We've talked to our
18,
about that.
14.
I think in part that's because the unwind has
Unless it
been
breaks.
That's where I took my buyout at.
able to get hedged. So we're not necessarily sure we're going to see a
It's a quick little cheeky scalp. Now I'm waiting for a bigger move.
Yeah.
Have some institutional capitulation. If you look at crypto, a lot of discussion about what crypto means for the U.S. equity market, and I do not pretend to be an expert there. But what I will tell you is that we do see a correlation.
We see it again, not pushing lower. We said the heavy support zone could come. Look, remember?
Has been a bit of a leading indicator for helping you get out of stocks. Unfortunately, at the bottom, they're pretty much coincident. So I don't think you can really look at crypto
Slide
to give you that
21.
lead to get you back in the market at this point in time. It was really giving us a sign at the peak. It's not really telling us too much now, but there, of course,
Got to be careful because you're really oversold. The low here.
Tend to go down as much as crypto.
Going to fill
So
this.
it does end up being sort of a safer asset. Now, if you look back at the AA,
Wait for the next candle. There you go. Look at that. Beautiful. Pull back.
is telling you that, sort of high net worth retail has capitulated. We can go into more detail there if you want. And on the CFTC, the institutions are getting very, very close. They may have already.
Well, stocks are down hard again today by 1.5% on the S&P, and one particular.
There we go. RSI popped out. Stochastic's pointing up in green.
Excellent. Just got
I want to
another.
break that blue zone.
I got 2 more cells on the RSI as well. Just a quick cheeky $30. Well, that will do.
Just yet. I just saw that name this morning come out with those earnings. I saw it happen with Walmart yesterday. The C-suite sounding surprised. The market, clearly analysts, very surprised by the outcome. On a story.
Again, it's just sinking like a stone. And you're better off going in and out on these little moves rather than trying to hold one big move because we didn't know. Nobody knew it's going to do all this. He had a bit of he had some support. He had a reversal here. Could have scared into stopping the trade out. So this is where you use the axe to get you in and out safely and wait for the candle. Here again, we're going down lower. If this candle finishes below, good reverse.
Yes. Buys executed.
Oh yeah, you're in. Yeah. Look at gold.
That is gonna do me for the day. I got 2 minutes to jump on this conference call. It was great trading with you again, Roy. Apologize for my tardiness. We'll catch you guys on the next live stream.
You take care, bro. Well done. Nice one. See you later.
Cheers.
Take care.
Later.
Bye.
So we know that the cyclicals just are not as important drivers as they've been in the past. And if you look at secular growth margins, those are the ones that have been up and to the right, which is why they have that market cap share. My point here, John, is that I think with individual names, some of these retailers in particular, some of them frankly had not been taking as much.
If gold's going to break this level, it's going to be on its way up. US-30, look, told you, look, you got sat on that points of interest, so just obviously hold your position. As soon as the RSI dips below that 15, we want to be looking for reversals. We're into heavy support zone as well, so just be wary of all that before you take a trade.
Are just so much more informative these days of S&P 500 margin trends and earnings trends, and they're really buffering them and boosting them in a way they weren't even 5, 6, 7 years ago.
Okay, we're going to go to the next candle and that's it. We're done 15 minutes. And why open? That's all you need to do. 15 minutes to bag those pips where we've got moves like this. 30 seconds till the next candle. Is this the candle where it's going to pop up, or is this going to be a continuation? We go again, like climbing up and down the ladder. That's how you use the points of interest, taking your scalping each one at a time. That's the way to do it. It's the safest way to do it.
It's out the window. Right now there is a monster spread between where the stock is.
10 seconds.
Was agreed. That conversation. I'm next.
I just want to push down lower. Let's see. Sit on that level. Wait, again, you've got 2 minutes. If it breaks it. Heavy support zone lower. Right on the line, 2 minutes to go.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a third dose is a must.
That wicks down.
Neutralize the variant. What we don't know is still that what are the effects of mix and matching between.
I got 2 cells there, 22 and 22. 44. Good. Very nice indeed to finish the day on.
Because as we know, many parts of the world
2 and 22. 1446. Yay, perfect. Quick in and outs on the cell. The 2 final cells, unless this breaks. Wait again. Or size 17, you've got 54 seconds left, so it's sat right on that support, so just got to wait. I put a trade in early, got in and out again, not a whole long period of time on that.
Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best.
Get one more trade. Get one more trade out of this. Remember, it's the first 15 minutes. What you usually like to trade, RSI's 18, just poking up. Look, stochastic's still looking good. All about price action. Did it drive down lower or not? Last trade, or are we done? So we go to just climb the ladder, down and back up again. Wait till the candles finish. It's pulling up now, look, you see. So now you go 2 seconds, 1 second, there we go.
What do you want to know today? Ask a question or visit SearchGo to find answers now.
B. Down.
If a deal does get done,
That heavy support zone look, and there is the blue zone, you see. So we'll wait for that.
it's out the window. There's a better chance for me playing for the Celtics in the playoffs, and that deal happened at that price. Now it just comes down to, can they renegotiate on the bot issue, or does he walk?
Dan Ives always has a sporting reference, doesn't he, for pretty much everything, including this story right here. There is an agreed price, it's $54.20, and the board says the following. The Twitter board, in a statement to Bloomberg, we intend to close the transaction and enforce the merger agreement. Ed Ludlow has more on the West Coast. Hey, Ed.
Yeah. Good morning, John. So we're trading down 0.6%, around $38 a share, pretty distant from the $54.20 per share offer that
testing that line again.
About the spread, right? The gap between those prices.
Ejecting off that support zone.
Wall Street assesses this deal But there's also a spread between what's happening in
Just
public
watch this.
and what's
We
happening
end our
behind
stream.
closed doors. Fantastic reporting
Not
on
in a
the
position
Bloomberg
yet.
terminal from our
Waiting,
DOGE
see if there's a
colleagues,
cheeky
who
buy.
basically explain, according to sources,
Or is it a
that
continuation
Elon
if it
Musk's
breaks the blue
advisors
zone?
and bankers are just carrying on as normal. Behind the scenes and in private, the negotiations are happening as if this deal was going smoothly.
Size 19.
One key piece of reporting that we cannot emphasize enough: the proxy filing of Tuesday was signed off by Elon Musk,
Minute 20 left.
according to sources. The proxy filing on Tuesday advised shareholders to vote for a deal at $54.20 a share. So there's this gap, right? The tweets that we all follow from Elon Musk and what his bankers and advisors doing in the background. But
Price
Wall Street's
bouncing.
not convinced. Any indicator we have from the market is that there is a lower probability of this deal happening at all.
Zones.
If it does, probably coming in at a lower price point.
The price of the stock is doing the talking. 37.83. The agreed price 54.20. That's a big spread. Ed, thank you. I have no idea what happens with this deal. I can guarantee you one thing: lawyers and bankers will make a lot of money. Shonali Basak has more. Hey, Shonali.
Hey, John, you have more than $100 million worth of deal fees that are associated with the Twitter deal for Goldman Sachs and JP Morgan. Some of that has come
But remember,
Remember,
no
Goldman and
buys
JP
at
Morgan
all.
did
So
the
it's been
fairness
pure
deal as
sell-off
well
on
when
the
it came
open.
to this Twitter deal. And when you look at the filings, actually what's so interesting is the idea of a lower deal price.
Say we're 20% up for the day. Watch this final move. I just want to see his final move. 16 seconds and this candle.
Pointed a lot of this out. It would get very hard to get much lower than that. And most of the deal fees, in fact, as most deals, come after the deal closes. So that's an $80 million payout that would come for Goldman Sachs, $53 million for JP Morgan. As we know, Morgan Stanley is advising Elon Musk separately, so there are more fees on that side as well.
Nice break below. Look at that. Beautiful.
It will be very interesting to see what that new deal price would be if you ever got one. And also, you know, I have to
Going to bounce off his zone now. That's what you want to see. If it's going to bounce.
Elon Musk might be tied to this deal regardless of
Final sell. If you took that, well done.
a 60% probability here that if this did go to court, that they
Right
would
on
still
this
have
level.
to consummate the deal.
Shonali, just quickly, separate story. You mentioned Goldman. You caught up with the CEO, David Solomon. What did he have to say?
Yeah, what's interesting is David Solomon has been hitting the nail on the head for a long time here on inflation. I go back to
Stochastic's
October,
now
I talked to
green,
him,
as you
and
see.
he said it was forefront of every conversation he had with investors. Now he's saying that it's extremely punitive. While he hopes we don't get into a recession, he certainly sees the risk of it. He says clients are preparing for lower asset prices, tighter monetary conditions. The thing to
Brilliant.
watch here, he says, is credit spreads. We're not
Two cheeky buys on that. Bought at the bottom of that. I want to do the final trades.
Bloomberg Terminal and on Bloomberg.com.
Here it is.
Right now. Shonali, thank you. From New York City, that does it for me. Up next on the program, Mike McKee is going to be sitting down with a Fed official that you need to listen to. That's going to be next on this program. From New York City, this was the countdown to the open. This is Bloomberg.
And that's it, because we're nearly half an hour into the open. And we're looking really, really oversold now. Green on the stochastic. So we might get a pullback. You want to be looking for that pull back to our trend line now. Got two cheeky buys in on that. As it was. Good day. Just over 20% for the day. Well happy with that. Now on heavy support zone. We'll watch this, and then, like I say, in the trading group, we'll probably be back. Look at the oil, 36 minutes oil.
Access the financial
Again,
world
thank you
on
for joining. I hope you learnt something, and I hope you grabbed some pips.
Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new
Support, look.
that go behind the scenes, plus acclaimed archival concerts.
Our size now 15, so like I say, I'm waiting for it. So it's gone red again, but again, you sat on heavy support. You see red and red, but you look where you are. Just be careful. Looking for some kind of reversal. Not yet, as the markets are tanking, as we say.
With a special guest, Chicago Fed President Charles Evans.
So we'll keep watching that within our group.
Thanks for coming in. It's nice.
But like I say, thank you so much for joining again, and thanks for Justin for joining us over in the US. And we'll be back again. Give us a like, subscribe if you haven't already subscribed, so you can find out when we're live next. And like I say, go to the website www.mohawkforex.com. Want to learn about the true scalping we do, the axe trading system, and how to join our group. And until the next live stream, take care everybody and get counting those pips. See you later.